think that there's a lot of negative noise, but at a fundamental level, the market still remains strong. We've actually seen stronger kind of Q-on-Q numbers out of many of our portfolios in China relative to their U.S. peers, and I think we're in a kind of unique arbitrage environment where investors are looking at those headlines about real estate, for instance, but they're not looking at the underlying data. An example of that would be that the NPLs on mortgages in China, so those non-performing loans, are only about 0.38%. That's much lower than the U.S. in 2008, where people were walking away from their mortgages. There's obviously about 6 to 7% of bad debt in the local markets that China will have to write off over the next 10 years or so, but it is not at the level of distress that one would expect. And so, again, an evaluation of the fundamental underlying data would prove that things are better than they would appear. And overall, that's why we think this is kind of the event trade or the contrarian trade of the last few years, just given how many people are walking away for non-fundamental reasons.
There's been a growing expectation, perhaps, that one thing that could potentially come from this financial conference is the willingness of the central government to perhaps provide some form of relief to those heavily indebted, I think the 12 of the 19 local governments that are obviously struggling with debt loads, whether it be, via transmission of some of their debt onto the central balance sheet, whether it be by affording more support. Do you think that if we were to see something concrete in that respect, that could, I would have to imagine it would be, but that could be a significant positive catalyst to the upside?
I believe so. We have to cut this drip feed of news around stimulus and the support that the central government is giving to those local governments. Last week we saw that 1 trillion yuan of injection of capital for infrastructure spending. The central bank has obviously announced that they will be injecting ample liquidity into the market after interest rates surged last Tuesday. So the expectation is that we need that sustained and robust stimulus package and kind of public support for local markets and obviously some of these real estate developers before people can really come back to the market, because as of yet, we're not seeing that sustained support.